Whales are accumulating, exchange supply is shrinking, institutional products are seeing inflows, and regulatory discussions are gaining momentum. The question is, what does this combination really mean for XRP? Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Across the globe, many digital asset holders continue to monitor XRP with strong conviction. There is a growing belief within portions of the community that once regulatory uncertainty settles and broader market structure becomes clearer, XRP could emerge as one of the strongest performing digital assets in the space. While different investors have different outlooks, there is no doubt that the XRP community remains one of the most active and engaged communities in crypto. One notable legal voice associated with the XRP community, John E. Deaton, recently commented on developments surrounding the proposed Clarity Act. According to his public remarks, he expressed optimism that the Clarity Act appears likely to gain approval. However, he also voiced concern about the influence of traditional banking interests on elected officials. His comments highlight the broader debate that continues between traditional financial institutions and the expanding digital asset sector. He specifically referenced Senator Edward Markey, who has historically supported traditional banking institutions and has opposed certain crypto-related legislative efforts. Public campaign finance records show that financial sector contributions have been significant across many political careers, and this dynamic continues to be part of the broader policy conversation in Washington. The key takeaway here is not political. It is structural. Regulation is evolving, and digital assets are increasingly becoming part of mainstream financial dialogue. Zooming out, the digital asset industry has grown into a multi-trillion-dollar market over the years. Regardless of short-term volatility, the sector continues to move forward with institutional engagement, technological development, and expanding infrastructure. Many participants believe that regulatory clarity, once finalized, could remove lingering uncertainty that has weighed on certain assets. Now let's shift to the numbers, because this is where things become particularly interesting. Recent on-chain data shows that large XRP holders, often referred to as whales, are holding record levels of XRP supply. Specifically, wallets holding between 10 million and 100 million XRP tokens now collectively control over 3.17 billion XRP. This represents just over 17% of the circulating supply, the largest share this category has ever held in XRP's history. That figure alone is significant. Since around October, this tier of large holders has accumulated approximately 3.17 billion XRP tokens. The accumulation trend intensified during periods of market turbulence, which some analysts interpret as strategic dip buying. Historically, large holders often accumulate during periods of fear or uncertainty when prices are under pressure and retail sentiment is weak. At the same time, data indicates that another tier of holders, those controlling between 100,000 and 10 million XRP, has distributed roughly 3 billion XRP since October 2025. This suggests a rotation of supply from mid-sized holders to larger wallets. Market structure often evolves this way during volatile periods, with some participants reducing exposure while others increase it. Another important factor to consider is exchange supply. Reports suggest that XRP balances held on exchanges have been trending lower. When exchange reserves decline, it can indicate that tokens are being moved into cold storage or long-term holding wallets rather than being prepared for immediate sale. While this does not guarantee price movement, historically it can reduce available liquid supply on trading platforms. Additionally, XRP-related exchange-traded products have reportedly seen fresh inflows, even as some Bitcoin and Ethereum products have experienced outflows. ETF flows are closely watched because they can signal institutional demand patterns. If institutional capital continues to rotate into XRP-focused products, it may suggest growing confidence in the asset's regulatory trajectory. When large holders increase their share of supply, exchange balances decrease, and institutional vehicles see inflows, some analysts begin discussing the possibility of a supply tightening scenario. In simple terms, if demand increases while available supply decreases, price pressure can build. However, markets are complex and influenced by many variables, so no single data point guarantees an outcome. It is also important to acknowledge broader macroeconomic conditions. Geopolitical developments, global interest rate policies, liquidity cycles, and equity market volatility can all influence digital asset prices. Even if on-chain fundamentals appear strong, sudden macro events can cause short-term market reactions. Currently, many sentiment indicators show elevated fear levels across portions of the crypto market. Periods of extreme fear have historically coincided with increased volatility. Traders using high leverage in such environments often face liquidation risk. Over-leveraging in volatile markets can amplify losses quickly. On the other hand, long-term investors who avoid excessive leverage typically focus more on structural trends, adoption, regulation, institutional participation, and supply distribution patterns. The data point that stands out most at the moment is this. Whales holding between 10 million and 100 million XRP now control the largest share of circulating supply in the asset's history. That is not an opinion. It is an on-chain measurement. Whether this ultimately leads to upward price movement depends on many factors, but historically, accumulation by larger entities is closely monitored by market participants. Meanwhile, institutional conversations around blockchain technology continue to evolve. Major banks and financial institutions have publicly acknowledged the efficiency benefits of distributed ledger technology in cross-border payments and settlement systems. Ripple's enterprise solutions remain part of that broader discussion around blockchain infrastructure modernization. All of this is unfolding during what many refer to as a digital financial transformation. Traditional finance and decentralized technologies are increasingly intersecting. Regulatory frameworks are gradually being built. Institutional capital is selectively entering. Retail participation remains global. Could XRP experience further short-term volatility? Absolutely. Markets can always move lower before they move higher. Could large holders trigger sudden price swings? Historically, large holders in any market have the ability to influence liquidity conditions. Could macro shocks temporarily disrupt trends? Yes. But the structural developments, regulatory progress discussions, whale accumulation data, exchange supply shifts, and ETF inflows are measurable factors worth paying attention to. At the end of the day, every investor must assess risk tolerance, time horizon, and strategy independently. Digital assets remain volatile. However, the numbers currently show historic accumulation levels by large XRP holders, declining exchange supply, and ongoing institutional engagement. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching, and we will see you again in the next video. Goodbye.